traders, I'm Tamara Mayer. Welcome to the Knockout Trader Dojo and to our Market Unwrapped series. In this series, I'm going to take a look at fundamental elements and their counterpart technical analysis to see how they all stack up and see if we can uncover any hidden insight within the chart. Today, I want to talk about central bank and rate cuts or hikes and where exactly do we sit? So I want to start with the Bank of Japan. They had their meeting last on Tuesday, so on the 19th of December. Now, there were a couple of comments from the Bank of Japan governor that the yield curve control that they've got is becoming more and more challenging to control coming into the next year. Now, the Bank of Japan, although, has also come out and said that they are in no hurry to see any move or to start to increase their interest rates. So they are still keeping their very ultra loose monetary policy. So we've seen this very strong movement in the yen in reactions to those reports. So let's think about what is the big deal behind this. Is it only affecting the yen? Well, not exactly. There's more to it than just the yen. So what happened is that analysts actually predict that we could see a market meltdown if the Bank of Japan tightening is not done properly. So when the Bank of Japan has been pumping and buying bond, pumping steady liquidity into the global economy, think about it, they're putting cash in the hands of Japanese investors. But because we had that very ultra low monetary policy and low interest rate, then what we ended up with is these Japanese investors go ahead and invest it overseas. So a lot of cash and a lot of flow coming in from Japan to the global economy. So what would happen if all of that will stop? So if this liquidity will stop, that will cause some tightening of the financial condition, which could make other central bank job to fight inflation a bit harder. Further to that, there are Japanese accounts now that are paying interest rates. So if we're balancing the risk, we might see the strengthening of the yen and the money coming back into Japan, which again can affect liquidity. So whatever the Bank of Japan decide to do has a major effect on the global economy and on the bond market as well. So that's why investors are keeping a close eye on the Bank of Japan announcement. It's not just the movement in the yen, it's also the global economy liquidity. Now let's move into Europe. Now, the European Central Bank in their latest meeting are said to us that they are still in inflation fighting mode. So they're not looking at rate cuts at all, even though we've seen a weakening of the Eurozone economy. What they are still doing is actually speeding up their policy of quantitative tightening, meaning they're still selling bonds onto the market to push up their yield. We also saw the Bank of England, and that was before we got the inflation reading that was a lot lower than what was expected, but they were also saying they are not ready to cut rates yet. So we are seeing a different tone coming out of Europe. However, Bank of Norway, they actually increased their interest rates, so they hiked in their latest meeting. And we also have the Reserve Bank of Australia. They're saying that they are still sensitive to inflation shoots and they might need to hike again. So there are central banks that are talking about still hiking and tightening monetary policy or staying still, even though we have a weakening of the economy. So now let's talk about the Fed. The Fed is sitting in a very different place. Now, the Fed in its last meeting was actually agreeing with the market on the direction of interest rate. So we always have this saying, don't fight the Fed. But in this case, the Fed came to the market point of view that we're going to see interest rate cuts in 2024. But this is where the divergence starts to come. How many and when? So the market currently, according to the futures, they're pricing out of 5 or even 6 interest rate cuts in 2024. And they're paying way more attention on the dot plot than what actually policymakers are saying. So policymakers have actually tried to push against this idea and saying they won't start cutting until the third quarter, and probably only going to be two next year, where the market is starting to expect a rate cut in 2024. So there's a bit of divergence in that expectation there. We saw a massive rally of the stock market, we saw a huge move in treasury market as well, and we saw the US dollar also being sold off. Now the question becomes, is the US dollar oversold? Have we moved too much? So if we go back to where other central banks sit, the expectation is also by the market that we are going to see some interest rate cuts because the economies are slowing down. So while there's this belief that the Fed was actually able to create and work toward that soft landing, in the US we might not see that in the Eurozone. So the Eurozone might be forced to cut rates, and if they cut rates as well, then we might see a strengthening of the US dollar. So we'll take a look at the chart, we'll look at higher time frame, you see where is everything sits. But what's interesting about it is that if we're going to see recession or stagnation in the Eurozone, and unlike the US economy that is still charging along, and the Fed was able potentially to engineer that soft landing, then we might see some resurgence of the US dollar starting in 2024. So let's have a look at the chart and see what the higher time frame are telling us on these major crosses. And I want to start with a chart of dollar yen, and this is the monthly chart, and we can see this strong push that we had here toward the end of 22, and we printed a very strong higher high. We were also very overextended, and we ended up with a bit of a pullback. What I liked about this pullback is that we went back into the averages, but we also printed a higher low. So the low over here did not go as low as this wick right here. So that tells me the buyers are still trying to gain control over this market. Then we came back up into the 138 area, pushed lower, came back up again, touched it again, broke above it, and came back to test it from above and moved to a higher high. So all through the buyers were still taking control over this market. But where we got to this seller territory, this is where the buyers failed. Why? Because we actually printed a lower high. So if we'll get precise and have a look at the cursor detail, we can see that here the high was 151.911 and the high over here was 151.946. So ever so slightly, but still a lower high. Sellers took over and pushed the price lower. So we are no longer in an uptrend. We broke that uptrend on the monthly chart. We printed a lower high. Now that works quite nicely with the fundamental element and with the narrative and the market expecting the Bank of Japan to start increasing their interest rates. But what's interesting is that there's still a big distance, a big divergence between the US interest rate and the Bank of Japan. So even if the Fed starts to drop and the Bank of Japan starts to increase, it's going to be a while until we'll see some sort of a similarity between the two, if at all. So we might be a little bit oversold around here, and we could see a bit of a pullback, maybe into this 148, 149 area. We are back into the averages, however, we are no longer in an uptrend. Another area that I'll be very happy to look for a pullback to is this 137. Again, back into that breakout level, because I do expect to see some more buyers around that area. So from a monthly point of view, I really wouldn't mind if it will go down into the 137, then I'll be looking for a bit of a bounce off this level. So taking a look here on the weekly, and we can see that push that we had here. It's a couple of weeks of selling pressure right here. This is that origin that started this push. Yes, it didn't go higher. We can see that quite clearly on the weekly, but there was still a lot of buyers sitting here. We can also see in more details that breakout level. So another touch of that level will be nice. We can also see momentum indicators are strongly pushing lower. We might see a bit of rebound around that area. Taking a look here on the daily, and we can see clear series of lower highs and lower lows. Even with this big reaction to the news, we're still making nice lower lows and lower highs. So to summarize this one, I would love to see that pullback continuing toward this black line around the 138, and then I would look for a bounce. Once again, it ties up really nicely with that narrative that we might see a bit of cuts from the Fed, a few increase of interest rate from the Bank of Japan, but that would still bring quite a distance between where the Fed rates are sitting and where the Bank of Japan's rates are sitting. The next market that I want to take a look at is pound versus the US. So let's move straight into the monthly. And from the monthly, what we can see is that the big picture was to the downside. We've got a high and then a low, lower high and a lower low. But what we can also see is the levels. And you can see we pushed from this low, we pushed all the way up into the area of the 1.31, rejected it and came back to test the 1.2. Then we bounce back, and this is where things become crucial, because if this will turn into a lower high, we can see another test of the 1.2 and potentially even a break of that area and going toward the 1.18. So let's move into the weekly chart. So we can see we had that strong sell-off. We broke the uptrend that we were at, but when we got into this area, this is a demand area. This is an area that the buyers popped out of. We had a push and a second push. So there is an expectation of another bounce of that area. But the question now is, how much do they have? How much power, how much energy do they have to keep on pushing the price higher? And we can see the buyers are starting to have a hard time around here. This is also sitting somewhere here in the middle. So this is when I say that price is not baked yet, because this can go both way. We can either break these previous touches, so around the 1.25, and then we could see a move toward the 1.23 and then the 1.2, or we might consolidate around here some more, find another support at the 1.25, go higher, take the 1.29 and keep on going toward the 1.3. So attack the higher level over here. So from this area, which coincide quite interestingly with the latest news that we've got, and also with the idea that the Bank of England might need to also start cutting rate to encourage their economy, to kickstart a bit more activity in the economy. So we've seen the reading on the inflation coming lower than expected. We saw a sell-off of the pound, really just as we saw a surge before that. So we had a strong pop higher, but the news brought the market lower. So I'm keeping an eye for the near future at this level. This is the breakout level. We had a fight card at this level, the 1.26, because if we'll break that level, then we could see the market pushing toward this origin of a move. And if that level is taken, then we could see a rollover. So from a fundamental point of view, the market is still unsure which one of them is going to be the first to start cutting rates. So there is an expectation from the Fed to do so, but is it going to really come out in March like the market is expecting? Or is it going to come in the third quarter of 2024, like the Fed officials are telling us? Nobody really knows at this point in time, but it could be that the Bank of England will actually be the first to cut rates, and that could see a strong sell-off of the pound. So from a technical point of view, it actually mirrors the information that we're getting from the fundamentals. We're sitting somewhere in the middle. We bounce off the demand area, but we also reacted to this supply area as well. We're sitting in the middle. And a similar story actually sits with euro dollar. And if you think about it, it's the same scenario, it's the same idea that the market is expecting a cut of the rates by the ECB in the near future because the economy is slowing down. But this one, on the other hand, has been going sideways for a long, long time. So for a couple of months, in actual effect, even since about a year now, since December 22, we are stuck in a range. We tried to go higher, completely rejected it, and actually went slightly lower. So we're sitting here at the top of this range, but we've done this before. If you guys remember around the 2015-16, we were stuck in a range for a very, very long time until we popped above that area. So from a monthly point of view, we are sitting at the top of this range, but we still have this week that push higher to clear if this market wants to go back into the breakout level around the 1.17 area. So if we drill down into the weekly chart, we can see that again, just like with pound US, we are in an uptrend, and from a higher high, we push into a lower low and into that demand area. Now, once again, this demand had a push and a second push, so there is some expectation to have more buyers sitting here. But the question is, how much do they've got? How much more energy these one have to go ahead and take this big level, big round number of 1.10 and continue higher. So far we have here two touches, and we'll take a look at these touches in more details on the daily chart. So again, these touches, what we can see is the last touch is actually lower than the previous one. So this is the origin that pushed lower. We found some buyers here, tried to push higher but failed, and this is quite crucial because we're actually printing some lower highs here. If this one is going to fail as well, we could see a push down toward this origin around the 1.075 area. Once again, we're seeing the price action mirroring the fundamentals on this market. On one hand, there is an expectation for a rate cut by the ECB, but they are still saying not yet. However, the economy is slowing down. And while we are trading at the top of the range, as we've seen on the monthly, there are signs of fatigue coming in from the daily and the weekly. So for potential opportunities, I'll be looking at the break of this level. So I need a confirmation that the buyers indeed are serious around that area. Because if we'll go back into the weekly, we can still see this rejection around here. And even if we break this level, we still have this around the 1.11 to clear before we start to climb up and go into that 1.12. So looking at these three major crosses, we can see that potentially there is an oversold status for the US dollar. There is an expectation by the market, as I mentioned, for 5 or 6 rate cuts coming in 2024, and it might be that the market has chewed up a little bit more than what the Fed is willing to give. So we could see the Fed actually still holding rates higher for longer than the market is actually pricing in, and that could see a resurgence in the US dollar. And would the other central bank be starting their rate cuts and push against the narrative of the market at the moment, which is expecting them to do so pretty quickly? Well, that is still left to be seen. So no one knows exactly what the central banks are going to do and what kind of events will come upon us in 2024. But what's for certain is that it's going to be interesting. Have a happy holidays and enjoy your break. Happy knockouts. Bye for now.